Good morning, everyone. So today we are going to start a new chapter titled Cash Flow Statement. So we learned from our principles of accounting course that there are several financial statements. There are several financial statements like income statements, then balance sheet, then a statement of so these three financial statements we learned in detail from our previous courses, right? Income statement, then balance sheet, and the statement of stockholders' equity. And we have another important financial statement is called the cash flow statement. So today we are going to learn in details about the cash flow statement. Now, what is cash flow statement? So cash flow statement will provide information. So cash flow statement will give you some information about cash receipts and the cash payment. So cash flow statement will provide you information. Will provide you information about cash receipt and the cash payment. Okay. So here cash receipt means your company received cash, then the cash payments means your company paid cash. Again, cash receipt means another word is called cash inflows. And cash payments means cash outflows. Cash outflows. So you can see that everything is related with cash. So you have different terminology here. So cash receipt means your company received cash. It means that it is cash inflows. And cash payment means your company's paid cash, that is cash outflows. So these are the different terminology. So finally, cash flow statement only deals with cash flow statements only deals with cash related transactions. This is the very important point. Cash flow statements only deals with cash related transactions. So who are the cash related transactions here? Cash receipts or cash payments, that means cash inflows or cash outflows. Your company received cash, your company paid cash. So everything is related with cash. So non-cash transactions. We have some non-cash transactions also. I will tell you later on what the examples of non-cash transactions. Non-cash transactions are not included in the cash flow statement. So only cash related transactions. And if you have any non-cash transactions, we are not going to include them in the cash flow statement. So this is the overview of cash flow statement. Very simple. So cash flow statement will give you information about only cash receipt and only cash payment. Okay, everything should be related with cash. Everything should be related with cash. And if you have any non-cash transactions, they are not belongs to cash flow statement. So this is the meaning of cash flow statement. Then we can see the classifications of cash flows. Classification of So we have three classifications for the cash flow statement. We have three classifications. The first one is called operating activities. Then second one is called investing activity. And the third one is called financing activities. So this cash flow statement is classified into three groups: operating activities, investing activities, and the financing activities. So every activities we have cash inflows and cash outflows. So what is the meaning here? Meaning here is if we have operating activities, then some transactions of operating activities increase cash. Okay, so cash inflows means increase your cash, and cash outflows means decrease cash. Then whatever we have financing and investing activities, we will have some cash increase. For financing activities, we also have some cash increase and cash decrease. So these are the three activities, right? Now, who are the operating activities actually? It is from income statement item. So income statement items are belongs to operating activities. And if you remember your principles of accounting 1 course, who are the income statement items? Revenues and expenses. Revenues and expenses are the income statement items, right? Revenues and expenses are the income statement items. So revenue and expense belongs to operating activities. Then who are the investing activities? This is called long-term investment. Long-term investment and property, plant and equipment. So these are the examples of investing activities. So investing activities are related with long-term investments and property, plant and equipment. Then who are the financing activities? It is called long-term liabilities and stockholders' equity. So look at the classifications of cash flows. So we have operating activities. Operating activities deal with only revenues and expenses because these are the income statement items. Then operating activities have some cash inflows and some cash outflows. Then we have investing activities. Investing activities are related with long-term investment, property, plant and equipment, have some cash inflows and outflows. Then financing activities are related with long-term liabilities and stockholders' equity. And we have some cash inflows and cash outflows. So I believe that from your previous course, you already know who are the revenues and what are the examples of expenses. You know who are the examples of property, plant and equipment. What is the meaning of investment, and what are the examples of long-term liabilities and stockholders' equity. Although maybe you forget it, but today I will review some of the concepts from these activities. So when we'll solve the questions, then we have to divide our solution into 3 groups. You understand my point? So when we will solve a question, our solution should have also these three separate sections. These separate sections. You cannot write long-term investment under operating activities. You cannot write revenue and expense under financing activities. So you cannot change the characteristics. So every activities have different characteristics, different items. You should find them properly and put and insert them properly. Otherwise, if you do not provide the information properly, then you have a mistake and you cannot solve the question. Now let's see in details. Let's see in details about this kind of activities with examples. So operating activities are the income statement items, revenue and expense, and we have cash inflows and we have cash outflows. Now let's see the examples. So let's see the examples of cash inflows and cash outflows. So we are now under operating activities. Sell goods and receive cash. That means you sell your goods, okay? You sell your goods and immediately you receive cash. If you receive cash immediately, okay, it is called cash inflows, right? Cash inflows. That means cash account, cash is going to increase. Cash is going to increase, right? Sometimes, if you remember, sometimes you sell goods, but you do not receive cash, right? You already sell goods, but you do not receive cash, so it is not cash flow statement. So I told you that from the very beginning, cash flow statement only deals with, okay, only deals with cash related transactions. Okay, so here we find that we sell our goods and immediately we receive cash. So cash plus sign means it is inflows. Okay. Look at another example. You sell your service. You can sell goods or you can sell your service and you receive cash inflows. Another example. Receive dividend. Okay, receive dividend. So when your company receive dividend, you should record it dividend revenue. Do you understand? When your company receive dividend, you have to record it dividend revenue. It means that received cash dividend. Okay, received cash dividend means revenue. So as you receive cash, it is cash inflow. As you receive cash, it is cash inflows. So these are the examples of cash inflows in case of operating activities. So we are talking about the operating activities, and operating activities deals with income statement items, and we have two items, revenue and expenses. So revenues part are related with cash inflows. So here we find that revenues part are related with cash inflows, because you sell your goods, it is your revenue, right? It is called sales revenue. It is called sales revenue. So it is called sales revenue. This one is called service revenue. And this one is called dividend revenue. Okay, so everything is related to revenue: sales revenue, service revenue, dividend revenue, and everything should be related with cash. And this kind of revenue will increase your cash, so cash inflows. Do you understand? Now we are going to see some examples for cash outflows, and of course it is related with expenses. And who are the expenses? You remember that. Cost of goods sold is our expense, right? Then salaries and wage expense. Then we have income tax expense. Then we may have interest. We may have advertising expense. We may have insurance expense. We may have supplies expense. Any other expense. So these are the examples of some expenses. But I told you that some expense you already paid cash, some expense you do not pay cash. For example, utilities expense. For example, today we are using the electricity, right? Today we are using the electricity, but today our university is not going to pay this utilities bill, right? So our our university can pay this bill maybe 1 month later or 2 months later, something like this. So these are the expenses. You should know then. You should know that this expense is related with paid cash. So it should be related with paid cash. It means that cash is going to decrease. So all the expenses should be related with cash payment. Okay, it should be related with cash payment. If it is not related with cash payment, it is not cash flow statement. Do you understand my point? So this kind of expense, sometimes your company paid cash, sometimes your company do not paid cash. So if your company paid cash, your cash will decrease and will record it under cash flow statement. We'll record it under cash flow statement. So these are the examples of operating activities. So operating activities deals with revenues and expenses. Revenues are related with cash increase and expenses are related with cash payment. So you can see that whatever you have revenues, whatever you have expense, it should be connected with cash. If it is not connected with cash, it is not cash flow statement. So I already done this part. Operating activities. Do you have any question from operating activities? Now let's see the investing activities. So investment activities talking about long-term investments and property, plant, and equipment. Now we are going to see how our cash increase through investing activities and how our cash decrease through investing activities. First, let's see the cash outflows. So your company purchased land. Your company purchased land, okay? Or your company can purchase building, or your company can purchase equipment. So this is called property, plant, and equipment. Property, plant, and equipment. So land, your company purchase land, your company can purchase building, your company can purchase equipment, and paid cash. So if you paid cash, it means that your cash is going to decrease. Do you understand up to here? So your company purchased property, plant, and equipment. Your company purchased property, plant, and equipment means your company purchased land, building, and equipment and paid cash. So as paid cash, so cash decrease. And cash decrease means it is cash outflows. It is cash outflows. Now, few days later, your company sell some land, or your company sell one building, your company sell the equipment. It means that few days later, your company can sell some property, plant, and equipment. And if you sell your land, right? If you sell your land, if you sell your building, you can receive cash, and receive cash, so your cash increase. So try to compare these two items. Your company purchased property, plant, and equipment and paid cash, right? And your company sell some property, plant, and equipment and receive cash. Do you understand? So one increase your cash and another decrease your cash. So look at another example. Your company purchased investment. So your I can make it easy. Your company purchased property, plant, and equipment, and your company sell property, plant, and equipment. So first example, we see that your company purchased property, plant, and equipment and sell property, plant, and equipment. And here property, plant and equipment means land, building, equipment. Now your company purchase investment. Your company purchase investment. What is the meaning? What is the meaning your company purchase investment? Okay, it means that your company go to the stock market and purchased another company's stock and bond. So what is the meaning? Your company purchase investment. It means that your company go to the stock market, okay, and purchased another company's common stock, another company's preferred stock, or another company's bond. Okay, it means that. And when you go to the stock market, you have to pay cash immediately. Okay, and paid cash. And paid cash. Like this. That means your company, what is the summary here? Summary here is your company purchased investment. Your company purchased investment and your company paid cash. Here, your company purchased property, plant and equipment and your company paid cash. So when you buy another company's stock, try to understand. When you buy another company's bond and when you buy another company's stock, it means that you are going to invest your money, right? You have a lot of money, for example. You have a lot of money. Now you go to the stock market and you buy another company's bond, you buy another company's stock. It means that you are going to invest your money, right? You are going to buy investment, purchased investment. And when you buy investment, then it means that you are going to pay your cash. Now look at the opposite. Look at the opposite. Your company can sell investment. Sell investment. That means your company go to the stock market and sell the investment. Sell investment. So you can buy, look at here, you can buy another company's stock, okay, anytime, and you can also sell it anytime. So you buy investment, okay, you buy investment and you can sell your investment again. So when you sell investment, you receive cash. So plus item. Clear? So for example, you are here, you want to buy another company's stock. You can go to the website of the stock market, okay, and you can pay cash and you can buy stock. Now you don't want to hold other people's stock, you can immediately sell it, and it means that you can immediately sell your investment and you receive cash from the stock market. So these are the examples of buying property, purchase property, plant and equipment, and purchase investment. And this is the example of sell property, plant and equipment and sell your investment. So this is the investing activities. Investing activities talking about investment and property, plant and equipment. So you should know clearly about the investment. Okay, I can make it more clear to you. If you buy another company's common stock or preferred stock or bond, okay, you can buy another company's common stock, preferred stock, or bond. Okay, so if you buy another company's common stock, preferred stock, or bond, it means that you are investing your money to another company. And in accounting, it is called investment. This is the terminology, investment, right? Investment. Now you can buy investment and you can sell it again. So investment is something like a piece of paper, something like this. You invest your money and you receive a stock. You can sell it and you can get the money back. This is investment. And another terminology, property, plant, and equipment, means land, yes. So these are the main examples of property, plant, and equipment. So you should know what is the investment, and what is the property, plant, and equipment. Okay, what is the investment and what is the property, plant, and equipment? You should have clear understanding. Another example you can see here. Another example is you provide loan to another company or another people. For example, you give me loan. You have a lot of money, you give me some loan. Okay. So if you give me loan, okay, it means that you paid cash. It means that you paid cash. Now, few days later, you collect principal amount of loan. So you provide me loan, and you give me cash. Few days later, I return back your money. I return back your money means you are collecting the principal amount of loan. You are going to collect the principal amount of loan and you receive cash. It means that you receive cash. You receive cash. Now let's see the summary. Summary of investing activities. So we have three components here: property, plant, and equipment. We have investment, and we have loan. So three components here. Now for the property, plant, and equipment, we have two groups here. Something like buy PPE and sell PPE. Then for the investment, we have the same. We buy investment and we sell investment. For the loan, we have again two components for the loan. Provide loan. So these are the summary of investing activities. Do you have any question? So buy property, plant and equipment, it means that shall decrease. Cash minus and cash plus. So this is the summary you should remember, because you cannot write investing activities under operating activities. So you have to know what are the difference between all the activities. So this is the summary of investing activities. So now let's move on to the last topic, financing activities. So financing activities deals with long-term liabilities and the stockholders' equity. So these are the two items under the financing activities. Now look at the cash inflows of financing activities. Your company sell bond, sell common stock, your company sell okay, so your company sell bond. Okay, And you know that if you sell bond, it means that you are going to receive cash. Then your company sell common stock and received cash. Your company sell preferred stock and received cash. So this is called cash inflow. Okay, this is called cash inflow. So when your company sell bond, it is called long-term liabilities. Right? When your company sell bond, this part is about long-term liabilities. And when your company sell common stock, this part is about stockholders' equity. So I believe you understand the difference between long-term liabilities and stockholders' equity, right? Your company sell bond and receive cash, it is related with long-term liabilities. And when your company sell common stock and sell preferred stock, receive cash, it is related with the stockholders' equity. So this is called cash inflow. This is called cash inflow. Now, what is cash outflow? You remember that your company when your company sell bond, can you remember when your company sell bond, we receive cash, but we have another terminology is called buyback bond. Can you remember this? Buyback bond means bond redemption. Can you remember this terminology? Your company, why your company sell bond? What is the reason your company sell bond? Because your company do not have money, right? Your company do not have money, so they sell bond and collect cash. Now, 2 years later, maybe your company don't want to continue the bond. Your company is call back the bond. Can you remember call back, buy back bond, or call back bond? Can you remember this term? So when you call back the bond or when you buy back the bond, what you have to do? You have to give me cash. Otherwise, I will not return back the bond, right? You have to give me cash. So paid cash means cash decrease. I think you remember from our long-term liability chapter. We learned this from our long-term liability. Now we have another terminology, if you remember. Not buyback bond. It is something like buyback common stock. Can you remember when you buy back common stock? What is the accounting terminology? Can you remember this? Your company buy back common stock. What is the terminology? Can you remember? You don't remember? So what is the meaning of treasury stock? Treasury stock means company buy back their own stock, right? Treasury stock. So you remember company buy back treasury stock. What is the journal? Journal is treasury stock debit, cash credit, right? Cash credit means company paid cash. Buy back the bond. What is the journal? Bonds payable debit, cash credit, right? Can you remember this? Yes. So this is the things our cash decrease. We have another example to decrease cash, because if you sell common stock, you know that if you sell common stock, you will receive cash. If you sell preferred stock, you will receive cash. But in return, you have to pay cash dividend. Can you remember this? If you sell common stock, if you sell preferred stock, you have to pay cash dividend for common stock and preferred stock. Right? So when you paid cash for common stock and preferred stock, it means that your cash decrease. Your cash decrease. So this is the summary. This is the summary of financing activities. This is the summary of financing activities. So your company do not have cash. Your company do not have cash. So what your company can do? Your company can sell bond. And sell bond and receive cash. So it is plus item. Cash is plus here. And it is related with long-term liabilities because we have to prove that financing activities means they are the long-term liabilities and they are the stockholders' equity. So again, your company sell common stock and receive cash. Your company sell preferred stock and receive cash. So cash inflows from financing activities. Flows from financing activities. Buy back the bond or call back the bond or bond redemption. So here the journal is bonds buyback means bonds payable close, bonds payable debit, and you paid them cash. You buy back the common stock. That means treasury stock debit, cash credit, your cash decrease. And whenever you are going to sell common stock and preferred stock, you must pay them dividend. You remember, if you receive dividend, you can see that operating activities. If you received cash dividend, okay, it is your revenue. So you may make mistake here. Received cash dividend, we have to record it as revenue. But when we paid cash dividend, okay, when we paid cash dividend, it means that when we paid cash dividend, it means that the stockholders' equity value decrease. Stockholders' equity value decrease. So here we can see that long-term, we have two components, long-term liabilities and the elements of long-term liabilities is issue, bond. And we have stockholders' equity. And who are the elements of stockholders' equity? You know that it is common stock, preferred stock. Then we have additional paid-in capital. Then we have treasury stock. We have treasury stock. Then we have dividend. And here issue bond and bond redemption. So these are the components of long-term liability under financing activities: issue bond and stockholders' equity. So you should know this kind of examples. You should know this kind of example. Stockholders' equity components are common stock, preferred stock, additional paid-in capital, treasury stock, and dividend. So these transactions, some transactions increase your cash, some transactions decrease your cash. So you have to be very careful because I told you that when we will solve the question, when we will solve the question, we have to classify our cash flow statement into these three groups, right? And different activities have different examples. So I repeat to you again that you cannot write operating activities under financing activities, or you cannot write financing activities under investing activities. So you should know who are the operating activities, who are the investing activities, and who are the financing activities in details. Very carefully you have to know them, because you cannot write one activities by mistaking another activities. If you do so, you will lose your grade. Okay, so this class is important to know who are the operating activities, who are the investing activities, and who are the financing activities. And when our cash increase and when our cash decrease, we should know very carefully. Okay. So this is the first class about cash flow statement. So this is quite difficult chapter. So I will go very slowly, step by step, to give you more detailed information about cash flow statement. And cash flow statement also a very important topic in accounting. So do you have any question? So if you don't have any question, that's all for today.